They told me the whales were panicking. They weren't. While retail investors were refreshing their portfolios every 30 minutes, watching numbers bleed red and convincing themselves the whole thing was collapsing, a completely different group of people was quietly doing the opposite. Not talking about it, not tweeting about it, just buying, accumulating, adding to positions that were already massive, in an asset most people still don't fully understand. And here's the part that should make you stop scrolling. The wallets holding over $1 million worth of XRP now control nearly 3/4 of the entire circulating supply. That's not a rumor. That's on-chain data, real addresses, real accumulation. Over $1.5 billion XRP quietly scooped up in just 6 months during one of the most uncertain, choppy, emotionally exhausting stretches the crypto market has seen in years. When retail was selling the dip, the millionaires were the dip. That asymmetry between what sophisticated money does and what the average person does is one of the oldest wealth transfers in the history of finance. And right now, it's playing out in real time, in a market most people still dismiss as speculation. So let's talk about what's actually happening, not the noise, not the fear, the architecture underneath all of it, and why the people who understand it aren't sleeping much. There's a concept in technology that almost nobody talks about until it's already happened. It's the idea that the most transformative applications of any new infrastructure aren't the ones people predicted. They're the ones nobody imagined until the infrastructure existed to make them possible. Think about the early internet. The people building it in the 1990s talked about email and information sharing. Nobody sat in a boardroom in 1994 and said, we're going to invent a platform where people film themselves dancing for 15 seconds and build million-dollar businesses. That wasn't even a category of thought. It couldn't be, because the tools that made it possible didn't exist yet. Tokenization is sitting at that exact same moment right now. Everyone talks about tokenizing real estate, bonds, stocks, the obvious stuff. The things that already exist in traditional markets and could theoretically be placed on a blockchain for efficiency. That conversation is already happening at the highest levels of global finance. BlackRock is talking about it. Major banks are talking about it. The estimates floating around for how large the tokenized asset market becomes range from $30 trillion to over $100 trillion in the next decade. But here's what one of the sharpest minds working in this space said recently, and it hit differently than most things I've heard. Once you start building with tokenized assets, you can reassemble them like Lego blocks into products that don't exist yet, products that nobody has conceived of, services that will look as obvious in hindsight as streaming video looks today, but that right now exist only as a blank space where an idea hasn't formed yet. That's the real frontier, not the known opportunity, which is already staggering, the unknown opportunity. The products that emerge from the collision of programmable money, tokenized assets, and a financial infrastructure that operates in real time, globally, without gatekeepers. When people ask why XRP specifically, that's the answer. Not just the transactions, the foundation. Now let's get into something that doesn't get explained clearly enough. For a financial system that moves trillions of dollars to function, actually function, not theoretically function, the bridge asset facilitating that movement has to be priced in a way that can absorb the volume. This isn't opinion, it's mathematics. Think about it like a pipe. If you're trying to move a river through it, the pipe has to be big enough. Right now, at current market cap levels, the XRP pipe is too small to carry institutional scale tokenization volume, which means one of two things has to happen. Either the system doesn't launch at the scale being discussed, or the asset undergoes a revaluation before the volume arrives. The second scenario is what people in the know are describing, not a gradual climb driven by retail enthusiasm, a repricing event that happens at the infrastructure level before the floodgates open, because the system mathematically requires it. Even a fraction of a percent of institutional tokenization volume flowing through requires a dramatically higher price per unit than what exists today. This isn't a prediction from some anonymous account. This mirrors what Ripple's own leadership has described. The dynamic where utility creates gradual price appreciation. Speculators observe that appreciation and pile in, and that second wave of capital is what launches price into entirely different territory. When you hear 3-digit XRP price targets from credible sources, this is the underlying logic. Not hype, not wishful thinking, but the mechanics of supply, demand, and infrastructure requirements working together. Fixed supply, exponentially increasing demand. You don't need an economics degree to see where that goes. There's a larger story happening simultaneously that most people in the crypto community are watching in isolation, when they should be connecting the dots. SpaceX is now one of the most valuable companies on the planet, And the reason why matters more than the valuation itself. Starlink, the satellite internet service that wraps the entire globe in broadband connectivity, isn't just a tech product. It's the precondition for every ambitious vision about financial inclusion, banking the unbanked, and distributing economic access to people who have never had it. There are billions of people on this planet who don't have reliable internet. They don't have bank accounts. They exist entirely outside the financial system that the rest of us take for granted. You cannot tokenize the global economy and then exclude the majority of humans living in it. The infrastructure has to reach them first. Starlink is that infrastructure. And when you layer onto it what's being built with AI agents operating at machine speed, making financial decisions and executing transactions without requiring human intermediaries, you start to see the full picture. A globally connected population, with access to financial services delivered from orbit, running on settlement infrastructure that operates in seconds, not days. This is why Ripple put an astronaut in their early commercials beaming money down to a wedding on Earth. It wasn't random creative direction. It was vision documentation, a company communicating what they believed the future looked like before most people had the context to understand what they were watching. The pieces are assembling. They've been assembling for years. The people who saw it early have been accumulating quietly, while everyone else argued about whether any of it was real. Regulatory clarity has been the longest-running uncertainty in this space, and it's finally moving. The formal classification of XRP as a digital commodity by both the SEC and CFTC in March removed the single biggest cloud that had been hanging over the asset for years. The legal ambiguity that once gave institutional money a legitimate reason to stay on the sidelines is gone. The runway is clear. Now the conversation has shifted to the Genius Act and broader stablecoin legislation, frameworks that would define the rules of engagement for digital assets at the federal level. Analysts at major research firms estimate that legislation is closer to becoming law than it's ever been, with some pointing to specific August windows for presidential signature. Galaxy Research recently put the probability at roughly 75%. When that clarity arrives, and the trajectory strongly suggests it will, the confidence effect alone will be significant. But combine legal clarity with institutional infrastructure, tokenization infrastructure, global connectivity infrastructure, and a fixed supply asset sitting at the intersection of all of it, and you're not looking at a rally. You're looking at a reclassification of what this asset is worth. Charles Schwab's digital asset research team put it plainly. The Clarity Act could trigger the kind of price movement the market hasn't fully priced in yet. The people who wait for confirmation will be paying dramatically different prices than the people who understood the mechanics beforehand. One more thing worth addressing directly because it comes up constantly. The old criticism that Ripple was just a company surviving by liquidating XRP holdings with no real business underneath is now empirically false. Brad Garlinghouse has stated publicly that Ripple expects to end 2026 running at $1 billion annual revenue rate, not from XRP sales, from its payments business, institutional infrastructure, prime brokerage operations, and its stablecoin RLUSD, which has already crossed $1.6 billion in market cap. Ripple's acquisition of a significant stake in Flutterwave, one of Africa's most important fintech companies, valued at $3.3 billion, isn't a side story. It's evidence of a company that is actively building the connective tissue between its protocol and the real-world financial networks where trillions of dollars of value actually moves. Hidden Road, their clearing infrastructure, processes trillions annually. The company building the infrastructure is generating real revenue from real business activity. The asset that infrastructure runs on has a fixed supply. The institutional buyers who have been quietly accumulating understand this. The retail investors who panic sold the dip do not. One quick lesson while we're here. Leverage in crypto is how otherwise intelligent people turn a correct call into catastrophic loss. Watching someone go 5 times margin on an asset that's been downtrending for a year because they hope it has finally bottomed is not a strategy. It's a coin flip with borrowed money. Don't do it. The people who build real wealth in this space do it by buying more of what they believe in during drawdowns, not by amplifying risk at moments of uncertainty. The whales don't use margin. They buy spot, quietly, consistently, and they wait. After more than a decade in this, the pattern has become clear. Every major move in this space is preceded by a period where the people who understand the mechanics accumulate, while the people who don't understand capitulate. The smart money doesn't announce its positions. It doesn't need you to agree with it. It just buys. The data showing 74% of XRP supply concentrated in Millionaire wallets isn't a warning, it's a map. And it's showing you exactly what the people who have studied this the longest have decided to do with their conviction. The question has never been whether the technology works. The question has always been whether you understood what you were holding before the revaluation made it obvious. If you found this breakdown useful, subscribe. This channel goes deep on the mechanics that most people miss. Hit the like button if this changed how you're thinking about any of it, and share it with someone who's still trying to make sense of what's happening in this space. The conversation continues. And the next video goes even further into the infrastructure story that most of crypto isn't paying attention to yet.